Hello, Simply Wall Street. It's an up and coming investment platform that promises to help you become a better investor. Over the next 12 minutes, we are going to dissect the inside of Simply Wall Street's web-based platform to be able to validate the claim. Without any further ado, let us go ahead and get started. All right, excellent. Well, folks, let's first thing start from the bad part on here. In my research of this Simply Wall Street review, I wanted to see whether or not let's put this here whether or not Simply Wall Street actually has an app. Yes, they have an app. The app has over 100,000 downloads. That's good. The ratings is 3.4. So I wanted to find out if this was something that we could review. Unfortunately, no, because the app really, the ratings are not that reliable for the app part of it. Meaning that if you're somebody who's on the go, you may find some frustration here. For instance, say somebody, the app is phenomenal as in the information and the tool is offered, but it's a little silly. I cannot pay to upgrade my membership in any screen. That's a little bit left to desire. How about some other comment? The predominant comment here on the app version, that is, yeah. The information is great. That's fantastic. This is from September 23rd. The app is pro. No, I do not want to contact support to spend my free time writing all the issues. So the app version of this is not so great. But for us, we're going to be focusing on the web base. So this is what is this tool for? We have been presenting you a tool here for trading. Now we're going more into the investing. So it's for people who want to invest and they want to find a different way to go investing. You know, as an investor, you can't spend a lot of time looking for information here and there. All of it is centralized in the platform on here. We wrote an article review on this on successfultrading.com that we invite you to definitely take a look at. So where was the summary of it? The article is quite, we went further in detail, as you know, the future, some of the future of Simply Wall Street, Snowflake, Discover, Stock Screener, Company Report, Watchlist. But here today, I'm going to actually dive into the tool with you, right? Let's go ahead and do that here. So this is the image on the website. Become a better investor. How so? This is the value proposition. The value proposition for Simply Wall Street. We help you make informed decisions by giving you access to institutional quality data and analysis presented visually. I want you to remember that, the visually part, because in a lot of investing, typically you see a lot of numbers or anything. So this is the approach. Oh, by the way, I forgot something. You will learn about it on the website. But this was created in 2014 and is actually based down under. Good day, mate. So I just wanted to say that. So let's dive into the app. Enough with this blah blah blah. And I don't know. I'm excited to just playing with this. So this is how you get into the app. There's a free trial, 14 days, money guarantee. I mean those standard things on here. We will talk about the pricing at the very end. Let's focus on here. So the home section. Upon coming in, you have all of these. So for me, a little bit on here, yeah, it's because I have created already a portfolio. So that is tailored to that. But we're going to actually show you how to create a portfolio. Let's go to stock to see the layout. So here they are, very popular stock. You can select your country of interest. Yeah, you can select your market. You can say Indonesia or whatever you want. Let's say here, I like to do something typically here. Can I do? What if I go Naja? Yes, Dangote Cement. Hey, for those who know me, yeah, you know why I'm doing this, right? Industry, automobile. We don't have anything in Niger with automobile. How about commercial services? Yeah, we have quite a few. So you can study companies from all over the world. They say that they have over what's the number? Let's go here. Over 2.3 million users worldwide and covers 100,000 stocks. Not bad at all. Not bad at all. So let's go here and really trying to do this. So let's select USA and let's select industry, anything, right? So if we select any, all of these stocks come in you can click on any stock to get some perspective on it. Look at the perspective that you're going to be getting on stock on here. I don't know why I selected Visa. So they give you the executive summary. Yeah. They give you similar company, meaning the competitors. Okay, so from the get-go here, the executive summary, the pros in green, earnings are forecast to grow 14%. Okay, what's this is the forecast. You need to know pretty much what method they're using here. The research shows us that they're using a discounted cash flow method. You know, the DCF, it's an approximation as any other, but hey, you have to know that ahead of time. Has a high level of debt. That's interesting. So, and you see what I did there? I clicked on it to show. So here they're showing you the debt, and then they're showing you the equity. So the ratio between the two on here, 49% debt to. So as time has been passing by, let's say in 2016, 54%. Yeah. And at the time, I remember I was trading Visa back in 2016. It was $72 of the like. So nowadays, Visa, you can see that the debt to equity ratio has been decreasing. Yeah. Well, the debt itself, but the equity has been, the debt has been increased a little bit here. Mostly, if you don't know, they acquired a company in Europe. So that's where that is overall. So just by a click, you were able to access this information. Right? And as I'm going here, notice how we're just going through the section, right? So if we go back all the way, so executive summary, and then from here, we just say, and then it jump all the way to the financial health. But we can really resume just going through this naturally. Later shares and events, you have that on here nice and easily. So for those who are used to looking at going to different places to look at different things, they give you a nice summary on here. Now the next section here, you can jump section. You can want to go to valuation. The price to earning ratio is 42.5. So this is the model here. Overvalue, it's between 20.2%. Yeah. The current price is 208. They think that the fair value is about 173. And that's something that, because I played a little bit for a lot of companies, you know, the recent runners, right? A lot of them, they are considering them overvalued. Trust me. That's what we say that. So future growth, price to earning ratio model here. So the visualization compared to other tools, it's, if you are into really visualizing things, this is a tool for you. This is a tool for you. Future growth. Obviously, this is a modeling. So in 2025, this is what they're predicting in terms of revenue, but there is not really a breakdown on here per se. So that's something that's a little bit of a question mark. But hey, it is the model if you believe in that, and you can test it over time, right, to be able to see if it matches, let's say over 1 year, 2 years, and so forth. So before actually deriving your opinion on that, I mean, for me, I'm just clicking on here. Past performance, 16.8% annual earning growth. All right, so that's on here. So the both earnings and revenue. Growing profit, so whatever is not positive, growing profit margin versus current net profit margin, it's only 47% are lower than last year. Okay, so they give you concerns, and whatever in red and whatever is good in green. So past 5 earnings, past 5 years annual earning growth. You got to see here. So they're comparing between the overall markets, obviously, United States of America, that's what their industry. I don't know about IT industry. Yeah, you could say that. And the company itself, this is what it is doing. So here, accelerating growth. Visa has had negative earning growth over the past year, so it can be compared to its 5 years average. Earning versus the industry, they're minus 10% negative. Yeah, this is that here versus the industry, they are plus 3.2%. Return on equity, you got all of this section. Return on investment, the company 30%, the industry number is 13 point something. So this here, really, you just go through this for any company that you would like, and it can do it for you. Let's say this is the debt to equity ratio that we saw earlier under analysis, right? The balance sheet. Dividend, 0.61% current dividend. It may not seem that much, depending on your specific level, but the stock has been growing. So, I mean, it's a balancing act, right? So, because you can pay 10% dividend, but in terms of appreciation of the stock, that doesn't match. So we have to take those numbers with a grain of salt. Stability and growth of payment. Okay, a stable dividend. Visa is not paying a notable dividend for US market, therefore no need to check if the payment is stable. All right. So management. All right, they go really in depth on here. The CEO. Here you go. Hey, they have a new CEO. Actually, that was the turnaround in price for me. And you have noticed that for company under new management, that's an angle usually to take. Visa did that, McDonald's did that. You will see a lot of companies when, let's say, there's new CEO at the helm, things usually, yeah. So that's ownership. So, okay, here's a breakdown of inside trading volume and of the like. So insufficient data on here. I mean, if this is the type of information that you want to get, definitely you can have that. Company information overall, exchange rate, funded, all of the basic thing. Number of employees. On here, it's been tracked over the years. It's a company that's growing. I mean, if they did, the number of employees has gone from, let's say, 11,000, sub 10,000K in 2015, as of now, 20K. So, and they give you the location and of the like. So the listings of the stock in different places where the stock is listed in Europe, in the US, and in all the markets that it is listed. So this gives you really that fundamental type of analysis here. So we are inside the review of simply Wall Street. The name it's catchy on its own. Oh yeah, let's quickly go here, compare. So Visa, if we would like search for a company to compare. Okay, so what if we want to compare it? I mean, we have to MasterCard. Here you go. All right, so you can do next to each other, and then this is called the snowflake analysis. So meaning they're giving you strength in each area. So dividend here was in that, then the value is not the place so to be, but this is a nice way to compare. And then can we add another one? I mean, in this the newcomers, like, I mean, Square is not like, but they're in a similar industry. So then you can go neck by neck comparing these three. Not bad at all, right? So that's a nice feature to be able to do this in-depth analysis on there. So that's available here under the stock category. And then when we go, we like Discover. For us, we like Discover. So they have all of this section. Buy the dip. Have we heard that before? Forecast high growth, potential undervalued. This is how you will discover opportunities to invest in, based again on the own analysis. If you're into dividend, for instance, Dividend Rockstar. Yeah. Who are we having here? PPL. Yeah. Let's just click on it to be able to, and then you can go through exactly which that we just went through, overall the strength and everything else for that. So let's go back to Discover on here. What other category? Established, profitable, and undervalued. There is a category here that's a solid balance sheet and fundamental. Insider trading. Okay, interesting. So who do we have here on insider trading? Took it Sam. All right. Morgan Stanley, IBM, Snowflake. Okay, that has nothing to Kimberly-Clark, Vertex. So meaning that these are companies where recently they have noticed that, hey, insiders have been buying the share. So which could be a catalyst for a stock going further up. Yeah. Established, profitable, believe the hype. Okay, I like this one. I like this category. Amazon, Tesla, Netflix. This one, Pinduoduo. This is a China-based company. Zoom. These are all your companies that have just been zooming lately. You see what I did there? Zooming. Okay, I don't know. So Uncle Neo, Snap. So yes, Mercado Libre. This is a big retail like coming from Latin America. Yeah, is it Argentina? Yeah. Hopefully I didn't do something incorrect. I'm not sure of the country. So forgive me for. Actually, we can find out. Let's go find out. I know it's Southern America. So well, yeah. Company information, Mercado Libre, retail, and where does it hail from? Where does it hail from? Mercado Libre? Could you tell us? Could you tell us? Buenos Aires, Argentina. Yes. Knowledge, people. Knowledge. Okay, back here. Okay. Let's take a little. Aggressive. Oh, which one? Which category was that? I love the naming of the category. Uh, bullish retail stock. Look at the picture. The bull. Yeah. Okay, this is the category that I want you to look at. Environmentally friendly. So sometimes there's ESG. We publish an article on successful trading on ESG, environment, socially responsible, and a strong government, not government, governance. That is that ESG. So this year, let's see which one they are bringing on here. US Ecology, Housego, ABM, Quest. So yeah, if you are eco turn that you have a core value, these are the type of company that definitely you will be able to do here. So you can select a couple, do a comparison, or three, and compare, and each one of them you can see here, obviously, with this snowflake. I mean, I'm liking this snowflake thing here. It's really so. Very quickly here, so that's the discover on the discover, right? So you have all of this section where you can go. You can for instance, aggressive dogs. I like the aggressive dogs. Let's see, aggressive dogs. Who do we have in aggressive dog? What are we going to find in aggressive dogs that I know? Joint, Cheryl Mill, Postal Reality, International General Insurance, Loyola Pharmaceutical. Yeah, I was expecting to see pharmaceutical company, a lot of biopharma. Yeah, so that's what's gonna be on the aggressive dog. So American aggressive stocks. Okay, that's true. All right, so what else? Growth and a reasonable price. I just love the images. Inside trading, we saw that dividend rockstar, top Asian stocks, defensive stocks. Yeah, usually you're gonna find utilities on here. Yeah, so that because they are things that hey we need. Uh, you cannot go without them. So let's say which one do we see here? China Medical System Holdings, Spectris, Roche. Okay, that's biopharma from Europe. Let's see. I was expecting to see some utilities here. I don't see that many, but you get the idea about Jumbo. So I mean the list just go on and on. How many do we have here? It's just continuing, folks. Yeah, and you see then there's Snowflake, which area, so dividend and health, so not so much value, a little bit on future. So that's what this shape, the snowflake shape is supposed to represent for you. So I just click on there. When you click on it, it just brings you with the strength on here, the analysis. Yeah. Overall. So let's quickly move on here. And I want to spend some time doing the portfolio. I know that I said 12 minutes, but let's see. We're doing a review of Simply Wall Street to help us determine, answer the question, can Simply Wall Street help you become a better investor? They by focusing into visual analysis on portfolio. All right. So I already have a portfolio. Oh, fantastic. Great. I've only been here for how long? So let's just show you very quickly how to add something in your portfolio. Yeah. So you can add any company. So in my portfolio here, I have Snap, B1, Twilio, Pinterest. Who else? Okay, let me add in my portfolio. You can, I mean, I don't have to hide. So JD in my portfolio. Okay. Who else can I add here in my portfolio? Just that is as simple as that. I kid you not. So the first time that you come in, it's going to say create a portfolio, but it's not that difficult. So let's say, for instance, here, if let's say I want to edit my portfolio, yeah. All right. So right click to insert or remove arrow. Okay. Insert above, insert below. So you can insert below. Right click. This will contain invalid data. So here, for instance, I don't know. Let's just put AAPL and enter. And let's say who else? If I would just want so Facebook, and it's going to give me something. Oops. No. I need to select the country. So Facebook, NASDAQ. So is this, okay, click. So I want Facebook, enter. Yeah. Is it saving it? Why is it telling me that? Okay, all right, so, I want Apple. Come on, AAPL. New York Stock Exchange, this is the one I want. Okay, Jesus. So it was a bit easier to add it the other way. Okay, that's fine. I want back out of here, continue. So I was able to add them my portfolio. So add a company, I just do this. Apple. Updating your portfolio. This is it here. Let me add another one. Who do I have here? Pins. Okay, how about just because I want Baobab. All right, so you have your portfolio. Again, now you can analyze your portfolio. Here's your portfolio summary. 1 year return. Capital gain. Taxes around the corner. Total returns. Oh, fantastic. Yeah, not so bad. So news on your portfolio every day if you come in to check it out. Volatility versus the markets. Yeah, okay. So it's telling me historical value. Since I just created my portfolio, I don't have that historical value. Contribution to return. All right. So Apple account for 73% of the return of this portfolio. JD 174. So diversification. Okay, folks, this is really where it gets nice, right? So media, software, food, retail. So you can visually see here, hey, where's your money is going, and then you can adjust. You can adjust accordingly if you need be. Here's the valuation overall. So a little bit of a value, aren't we? Future growth. All right. So future growth, past average 13.5% future. So past performance 4.9% portfolio return on equity. So not bad. Return on investment is not bad. The market has returned 4.96%. The average performance return on over the last 5 years. That's the thing. 5 years here. Yeah. So you can download this if you want to. Yeah. Financial health, portfolio debt level 48.55%. Dividend, we don't have a lot of company paying us dividend. Estimated dividend yield 0.1%. These are growth stock mostly, right? So, all right, last but not least, folks, last but not least, the screener. All right. So, I don't have any saved screener as of now. Otherwise, I will have gotten it here. So, filter by market. So, let me add United States. All right, so done. Filter by industry. I want them all. I mean, you can go just and select whichever industry that you want, right? Building, construction, you get the idea, yeah? Secondary listings, do you want to have that or not? You can say market cap, then here, move the gauge. You want the big caps, or remember for yesterday we were doing something on one of the competitor for this tool, Finviz, for which we have given you. We're gonna put the video exactly right here. Yeah, so I'm gonna put a video at this front moment for you to watch this video after this to be able to compare what Finviz does and versus this one. So the share price, you can select. You want things that are above $200 or whatever the range that you want. Yeah. So you just continue in the filters like this one. 5 years beta. If you are into that type of things, you want a strong beta. Yeah. Valuation, same thing. P/E ratio of the like. If you can just select, you can just select anything that you want. Financial health. You saw some death. Yeah, 200% death would be. So debt to equity ratio, we saw some healthy company that were at 48%. How about here? You can go 35% on the like dividend yield. Maybe you want to have a portfolio, and you can create several portfolios, right? So meaning these settings do not have to be all into one single portfolio. You can manage several portfolio on here and then to be able to compare that. Hey, my dividend portfolio is doing this, my growth portfolio is doing that, and of the like. So this is how you will go about doing that on here. So for me on here, I'm gonna say save this screener. So name it we're gonna say Telex demo, simply Wall Street, description optional. Okay, simply Wall Street demo screener. Yeah, and then confirm. Ta-da! Updating. It finds 68 companies for us. With that, we didn't. I mean, this is just to give you an idea of the possibility on there. Obviously, remember initially we selected a lot of banks and then auto, and so you can tailor this to exactly be which that you want. So this for us, we think that there is value into this. Let's go take a look at what's the pricing. What's the pricing for this thing? You have 14 days of demo. Definitely go through. We invite you to go through our article on successful trading to get all the details here. So here's the plan. So the free version, a learning plan, provide access to institutional data, global markets, but you can only look at 10 company reports and companies per portfolio 6. When you upgrade to the investor plan, which is $115 yearly, you have access to everything. Yeah, you have access to everything, literally. So, and I think that's where the value the value is for the most part. Yeah, the ability to export to PDF and CDF is brought here into the professional plan, which is $305. So the investor plan is $115. So you can try it out to see. And then they offer a 14-day money back guarantee for all subscribers from the sign-up date. Past the 14 days period, refund shall be adjusted at our sole discretion, meaning the discretion of Simply Wall Street, which comes to you from down under. Wow. Sorry that it took so long, folks. We hope that you gain knowledge and information on this yet another tool to help you as an investor going forward with your financial literacy. We hope to see you on another episode on Successful Trading. Until then, have a great evening, have a great afternoon, have a great morning, wherever you're watching from. Bye-bye.